Hey, I'm Reza and we're back with another episode of To Invest or Not. Remember, this show is not a recommendation to buy or sell securities, but only suggestions for further research. Let's get straight to it. In this edition, we're going to take a look at Canadian cannabis stocks with potential. And first up on our list is HITI, a retail-focused cannabis company with 104 current locations spanning Ontario, Alberta, Manitoba, and Saskatchewan. To name a few of their cannabis retail brands, there's Canna Cabana, New Leaf, Meta, Grassy, City.com, SmokeCartel.com, and the list goes on. High Tide is considered the largest Canadian retailer of recreational cannabis as measured by revenue, and they are growing very fast. They also have a wholesale distribution division under Valiant Distribution. This year, they've managed to cut debt by more than half, from $72 million to $27 million, with trailing revenue having increased from $70 million to $152 million. They also got uplisted from OTC to NASDAQ, which gives them bigger exposure to investors. And in the venture exchange, last year they were trading under $4, but this year's chart shows a high of just under $13 and a range between $7 to $9 a share. They've maintained a good gap from last year's price tag. With this momentum and growth, it would be interesting to see if they can break out above the $13 mark. Next up is Heritage Cannabis Holdings. They operate as a cannabinoid company that focuses on the production and sale of medical and recreational hemp-based and cannabis-based products in Canada and the United States. Now, through their daughter companies, Heritage offers extraction services along with processing, manufacturing, and distributing medical cannabis products and cannabis oils. They have announced a third consecutive record gross revenue quarter for Q3 of this year and expect the fourth quarter revenue to increase between 20 to 25% above its record Q3. And if they succeed and continue with this type of revenue growth, their current trajectory shows they should be cash flow positive in early 2022. Now, if you take a look at CANN in the CSE, you notice a short-lived upward trend at the start of 2021, with the price climbing from around 13 cents to 20 cents before switching to a downward trend. Now, it's ranging between 5 to 9 cents, which appears to be its new support zone. If revenue growth becomes the catalyst CANN needs for attracting new investors to kickstart a strong bull run, then all one needs is to find the best entry point to buy the dip. Then we've got Tetra Bio-Pharma, a cannabinoid-derived drug development stage biopharmaceutical company. Their pipeline products focus on a range of medical conditions, including pain, inflammation, and oncology, such as ARDS-003, which is used for the treatment of sepsis and prevention of acute respiratory distress syndrome, Plenitude to treat advanced uncontrolled cancer pain, Reborn for the treatment of breakthrough cancer pain and fibromyalgia, and Serenity to treat cancer cachexia. The business is all about groundbreaking drugs, and so when you're checking out their business model and financial statements, remember it's mostly what they can discover and develop that brings in the dough. The stock market is one way of gauging investor interest in the company. In the past year in the TSX, TBP provide good opportunities for bullish traders, allowing them to gain more than 100% profit twice, first in late January, jumping from 16 cents to 37 cents, and then from roughly 17 cents to 49 cents in May. The market now has it at around 20 to 25 cents zone, and more success from their pipeline projects and research results may give new investors a chance to get in on the next potential bull run. And finally, we've got VIVO Cannabis. They cultivate, produce, and sell cannabis products for the medical and adult use markets in Canada, Germany, and Australia. The company offers dried cannabis flower products, vapes, pre-rolls, and cannabis oils, along with cannabis-infused chocolates and other cannabis-derived products under the Canna Farms, Beacon Medical, Fireside, Fireside X, Lumina, and Canadian Bud Collection brands. The company also operates a network of medical cannabis clinics under the Harvest Medicine name. Now, they've had a decline in revenue and cash position for Q3 of this year when comparing it to Q2, but they have managed to improve their adjusted EBITDA by 30% by reducing expenses. They are quite active. Quite recently, they rolled out new products under its Lumina Health and Wellness brand, Lumina Ultra Light and Lumina Spotlight. And before that, they completed their first shipment of EU GMP medical grade cannabis to Beacon Medical Germany. It's worth watching how they perform moving forward. VIVO may just once again reach their year high of 36 cents in February in the TSC. It is around the 10-cent zone, and that may prove a good entry point for those bullish on VIVO and think it may climb to previous highs with a really good catalyst. Well, there you have it. I tried to keep it short and concise, so if I have missed anything out, let us know in the comments section below so we can cover it on our next show. I'll be back with more lists, but let me know what cannabis stocks you think may have good potential. Don't forget to like this video and leave a comment. Subscribe if you haven't already so you don't miss out on any updates. See you soon.